Yeah, well, from my point of view, this is something that's been happening for quite a long time. It's not just something that happened on January 28th. We've been working towards this for many, many years. I think three most specific things actually was when the world went to zero commission is number one. Schwab, Fidelity, TD all announced pretty historically that commissions were now going to be zero. And this brought in a whole new wave of investors that would have never thought about investing in the stock market or getting involved in the U.S. capital markets. And then we had the second obvious wave, which was COVID. People had more time. People had more time to learn about the markets, to actually open up that brokerage account that maybe they've been putting off for years. And of course, entertainment wasn't around, right? There wasn't any sports books anymore. There wasn't gambling. So the one thing that remained open was the stock market. And of course, you also had every night people would come home and see new all-time highs in the market, a very, very aggressive Fed policy, and stimulus packages that just threw fuel on the fire. And then ultimately, I think the third was that kind of culmination of social media and investing that culminated in the GameStop scenario on January 28th.
And so is it all here to stay, or when a couple of those factors change in direction, which they inevitably will, whether that's the market pulling back and people experiencing serious losses for the first time, and or, of course, hopefully economic reopening so that we have other things to fill our time with, will retail engagement in the market decline at those moments?
Yeah, we may see a little bit of a decline and maybe a little pullback in engagement and activity. But what we will have gained is a now new educated young America in terms of how the capital markets work and how the financial system works. So they can be smarter about the financial decisions that they make going forward. So even if there is a pullback in engagement, it's still a positive for everyone.
So what are your numbers like right now? And how much did you benefit, if at all, from the Robinhood debacle when they had to restrict trading on GameStop and AMC and others when things were going crazy?
Well, we've been growing aggressively for the last several years. It just wasn't, one event that we became, a player, I guess, in the world of retail trading. This has been ongoing. We've been working hard at acquiring customers, and we found that where we position ourselves in the market is we're a bit more sophisticated in how we present our analytics, our charts, and our platform. So we take a lot of customers, like you've mentioned, from Robinhood that are looking for a bit more engagement. They're looking for a bit more data so they can make a better decision when they actually trade or make an investment. So this has been going on for a while, but no doubt did we see a huge jump in users when different brokers put on restrictions on specific names or brokers went down. Those are all big tailwinds for us.
What's your view on crypto and Bitcoin specifically, and how engaged are your customers with it?
Well, we've been really fortunate with timing. We opened up crypto trading in mid-November of this year, and Bitcoin at that point was about 17,000. So timing is very, very key in everything you do. So we've been really fortunate. We've seen a huge uptick in customers opening up crypto accounts on our platform. We're well above 1 million accounts right now, and we're looking forward to adding new product and adding new cryptocurrencies for our customers to invest in.
Anthony, what about the risk factor, if at all, being owned by a Chinese company? I mean, you're a Chinese company and expanding aggressively in America where, I don't know, consumers could be concerned about their data going to China, going to the Chinese government, about all sorts of cybersecurity risks, not to mention the geopolitical clash that is on full display right now between the U.S. and China, and a potential crackdown on Chinese financial companies in the U.S.
Yeah, Sarah, I'm glad you brought that up. So Webull Financial is a U.S. broker-dealer. We are a U.S. company. We're registered by the SEC and FINRA. Right? So our customers' information in the U.S. is based in the U.S. It does not leave the U.S. Right? Our Chinese parent company is a technology company. They do not run the broker-dealer. The broker-dealer is run here in the U.S. And our broker-dealer, Webull Financial, is cleared through a company in the U.S. called Apex Clearing. So essentially, our customer accounts are actually held at a U.S. clearing firm called Apex Clearing based in Dallas, Texas. So not one customer account is based in China. Not one piece of information is going to China in any sort of way. So it's a little bit of miscommunication there. We are a U.S.-based company.
Shepard Smith here. Thanks for watching CNBC on YouTube.